one of the best company you can find in the world.
Called ASML.
Very profitable, significantly margin, and great capital allocator.
It's the world's only supplier of extreme ultraviolet lithography machines.
Without the ASML and Taiwan Semiconductor, we wouldn't have these sophisticated chips now today.
Produce features that are 1/10,000th of the size of a human hair.
So far, they have returned around 40 billion to investors since 2025. ASML is pretty much irreplaceable.
You've got to try and think in a way what's coming in the future.
What are the potential risks to this company? Welcome to the latest episode of the Intelligent Wealth Podcast. And as usual, we've got our eminent guests here, Carl Roberts, who's fellow director at our company, Minerva Money Management, and Awet, who is our head of research, Awet Ghirmay. Okay, so just to recap, this podcast is designed for, let's say, the more serious investors out there. We will discuss a different company every month. This month, we're delighted to be discussing a company called ASML, which is a fantastic business. We don't consider this to be advice. We're just expressing our own opinions. So please don't rely on this as a recommendation. We always feel that it's a mistake to follow anyone else's tips because we're all very different. We've all got different attitudes to investment risk, different emotional makeups and different timescales. So in my personal experience, it never works when you're following someone else's tips. That doesn't mean you should totally ignore it, but just treat whatever we discuss about ASML as part of your own journey of research into this company. If you think it's the type of company you would personally like to invest in and that it suits your personality type for investing. So as part of that, whichever company we feature, we will offer you a one-page company snapshot, which you can request in the notes that come with this podcast. So without any further ado, let's just introduce ASML to you. Now, normally we're looking for companies that have got a visionary founder-owner because we find those kind of companies are better run in usually because the owner has skin in the game. They've been around usually for a lot of years. They've got long-term planning, and family-owned or high family ownership of businesses usually results in far better results for obvious reasons. But you do get the exception that proves the rule. And we feel that even if you don't have a visionary founder owner that owns, say, 10% or more of the shares, it can still work if the company is run like a company run by a visionary founder owner. And we feel that is the case with ASML. Now, to give you a bit of background, the CEO is someone called Christophe Fouquet. I hope I've pronounced that correctly. French name. He's CEO, been 16 years at ASML. The total ownership of shares by the management in ASML is actually very tiny as a percentage. It's 0.012%, which is very, very small, but that still equates to 33 million euros. That's still quite a lot in monetary terms, even though it's a very tiny percentage. Back to Christophe Fouquet, he led the what's called EUV division before becoming CEO. Now, there'll be a lot of technical terms thrown around today, and you're probably thinking, what on earth's that? EUV means extreme ultraviolet, which is the process that ASML lead the world with. He has deep technical and customer background, so that's really good. Now, how did ASML come about? Well, back in 1984, it was formed as a joint venture between Philips and ASM International. So not founded by one individual, although there's other companies would have been originally. So because it's between Philips and ASM International, they called themselves Advanced Semiconductor Materials Lithography, hence the name ASML. So it was a joint venture. So we find this is an incredibly interesting and very dominant company. I won't spoil it by giving away all the secrets of this company. I'll let Carl and Awet discuss that more. So let's move over to Carl to explain a bit more what ASML actually do and why they're so dominant. Over to you, Carl.
Yeah, thanks, Tony. Yeah, so ASML is a Dutch company listed on the Euronext Amsterdam, which is the Dutch stock exchange, and also on the NASDAQ, both with the ticker ASML. It employs around 43,000 people, and it's got a market cap of around 348 billion euros. I think it makes it Europe's biggest sort of technology company. And essentially, it's the world's only supplier of extreme ultraviolet lithography machines, which are essential for the manufacturing of the most advanced semiconductor chips in the world. So it builds these machines, which are sort of huge machines that have hundreds of thousands of different parts. And these machines use light to print tiny circuits onto silicon wafers. And these chips will be in everything, from smartphones, laptops, data centers, AI servers. So it's a company that's right at the forefront, into a sector that's absolutely booming now and has got a long way to go. Just in terms of share price information, so they listed in the Dutch Stock Exchange in 1995, started with a share price of around $2. Sorry, not $2, €2. By early 2019, the share price had reached 133 euros, which equates to nearly a 20% compound annual growth rate over that 23-year period. And since 2019, it's just gone great guns. So it's gone from 133 euros right up to around 890 euros today, which gives it a 22% compound annual growth rate since launch and a 37% compound annual growth rate in the last 5 to 6 years alone. What's really great about this business, and we've said it many times on this podcast before, is it's a picks and shovels business. We've said loads of times about the gold rush and how the people that made money in the gold rush wasn't the people that found all the gold, it was the people supplying all the picks and shovels to all the prospectors that went to try and look for gold. Same with crypto. In more recent years, you could argue that the likes of Coinbase, crypto broker, the likes of BlackRock with their crypto ETFs, they don't really care what happens to the Bitcoin price or the crypto price because they're making money regardless. They're making money on all the trading in between investors. So this is ASML. They've built the machine that everyone else needs to use to be able to make these really high quality chips, essentially. So over to you, Awet.
Thank you, Carl. ASML is pretty much one of the most important company in the world, and pretty much it plays a significant role in the world digitalization. Because if you look at one of the biggest critical thing we have in the world is processing power. Even the war between, the technological war between US and China is a processing power. Whoever achieves the higher processing power is pretty much going to win this technological war. And I think even with scientific breakthrough, if we want to cure cancer, we need to have a breakthrough and we need a processing power. That's why I think most innovation and most of this AI need a lot of power hungry and processing power hungry. So even when we look at the modern car, there is like between 1,000 to 3,000 chips within a car. So as we digitalize, as the world become more digital, there will be more needed for processing power, more chips, more advancement, and require more processing power. So AI, again, as you mentioned it, Carl, is just going to be power hungry. It's needed more of these ASML chips. So ASML, when we look at the business model, 70% of the business comes from selling these big machines, and on the top of that, it charged between 200 to 400 million selling those machines to companies like Taiwan Semiconductor, and it takes 18 months to build these machines. So it takes a long time as well to build them because there's a complexity and there's a complex supply chain within that. And the 30% is pretty much, upgrading the machine and using software and application and so on. So there is 30% revenue breakdown here. When we look at ASML, as you mentioned, Tony, is monopoly. It's the only company on earth that can make EUV machine. Especially when we talk about the cutting edge chips, right, which is 5 nanometer, and it can only produced by Taiwan Semiconductor, which control pretty much most of the market as well. So there's two monopolies pretty much, and here are printing all these cutting edge chips. So think it this way: without the ASML and Taiwan Semiconductor, we wouldn't have these sophisticated chips now today. So it's very important. They play critical role in this advancement. And when we look at the ASML, they pretty much control 100% of the market share of the EUV, extreme ultraviolet, and more than 90% on the deep ultraviolet market. So there are pretty much 100% control. And when you look at ASML as well, they control 25% of this company called Carlsys. It's a German company that makes lithography optics and laser optics and mirror blocks. That's basically ASML thinking long term, strategizing, taking percentage of this company, and thinking long term. So they have a win-win. Maybe they will increase their shares in the long term. Historically, when you look at this market in the 80s and the 90s, it was controlled by two Japanese firms, which is Nikon and Canon. In the 80s and 90s, they were powerful and dominant. They were like ASML today. They were controlling 75% of the market share. But the one problem we learned from them, then they were just not futuristic. They were concerned about the present, improving what they had at that time, and they didn't have like a good culture that they were quite risk averse and slow to adoption, and so they were stuck in the past. And ASML could see the future at that time, and they could see what was coming today. And then ASML completely bet on one thing, and they got it right, and that's why they became dominant. But back then they were just tiny company, so they had a lot of breakthrough, and they became dominant. And Canon and Nikon, pretty much they are the small players now. So the big risk that we see here is most people are talking about the Chinese state-backed companies, which I have looked into them, and they still seems to, even though they have state backing and they are significant subsidies from the Chinese government, but they still 10, 20 years behind ASML. And by the time they get to the ASML level, ASML would be way ahead and move into other things. So one thing you learn is ASML is pretty much irreplaceable. Companies like Taiwan Semiconductor, Samsung, Intel, SK Hynix, and Micron all rely on ASML. And those companies, pretty much all the giant companies rely on those companies to print chips and to run all data centers and so on. So this is a dominant company which high switching cost. It's once you're locked into ASML ecosystem, it's very difficult to move because there's no alternative, and they can raise the price, and the customers don't have a option. There is no alternative. They are price taker, so ASML can increase price and they can still be happy with the price. I think when you look at the overall the semiconductor space, there is like when you listen to ASML earning call, they can see this market is getting into 1 trillion by 2030. So there's a huge market by the AI and 5G and electrification, and it just there's a lot of a tailwind in this area. And then that's why I think ASML, they can see there's a long growth, and we can see there's a backlog is growing. Like the booking, basically the feature booking they can see is, for example, on this earning call recently, they said they can see 36 billion feature booking. So they can see the feature is still, even though historically semiconductor business has been cyclical, but they can see there's a growth ahead. When we look at the cash flow as well, they are self-sufficient. They generated 9 billion cash flow in 2024, and they have done a lot of buybacks so far. They have returned around 40 billion to investors since inception. I think since 2025, and they've done a lot of buyback, and they are planning to do buyback in 2026. So this company is growing significantly and shareholders friendly and pretty much a monopoly. So you're buying a monopoly company and it's not trading at significant premium, and returned 40 billion since 2025 to investors. So that's huge.
Yeah, we'll come on to the potential risks of the company in a minute, but I just wanted to emphasize how astounding these machines are. They're actually the size of a double-decker bus. Can you believe it? And to ship one machine would take 7 Boeing 747s and 25 to 30 trucks. I mean, the size is just incredible. That's one aspect of size. The other size that I find absolutely extraordinary is that these machines produce features that are 1/10,000th of the size of a human hair. And that's just unimaginable. I just cannot imagine how you could create something so small, which is why they have to use light. Nothing else will do. So I just think that the technology is beyond belief, really. They produce these 13.5 nanometer extreme light to print nano patterns. I can't even imagine how small 13.5 nanometers is. I mean, you just cannot. It's so small you can't see it. So that's all very extraordinary. So this is an amazing company. I do want to come on to the risk because it's all sounded glowing and fantastic so far, and it's rare that Awet gets that excited about something, that he's that glowing and enthusiastic about it. But I wanted to come on to what are the potential risks to this company. Can you think of any, Carl?
Yeah, of course. It's worth just stating it again. I think we did mention it earlier, but that ASML are the only company in the world that can produce this machine for the chip of this quality.
Yeah.
So if that's not a monopoly, I don't know what that is.
Exactly.
But what that also means is they are heavily reliant on this aspect of their business, because I think majority of their revenue comes from it. Obviously, majority of their people are devoted time to it. So I always think with technology, technology grows exponentially. So that you've got to try and think in a way what's coming in the future. And to be honest, none of us knows. Who knows what type of chip could be invented next, or what type of machine could be invented next for the next sort of set of chips. So you've always got to be forward thinking and not just be stuck in in the current model. If you're a market leader, you've just got to constantly innovate and go for it. ASML, like we've looked previously on the share price, they seem to have done a good job over the years, going all the way back to 1995, have maintained a really good compound annual growth rate, over 20% growth. So they're doing something right, and they've continued to innovate and go for it. But there at some point where there will be the next wave of machines and technology, and are they going to be positioned right to go for that? There are competitors in the lower end of the chip market, so they dominate the top end, but in the sort of less advanced chips, you've still got the likes of Canon, Nikon, Tokyo Electron. They've all got their own machines and facilities to print those kind of chips, so that they've got a lot more competitors lower down the range. But it's interesting that ASML do have, I think it's over 14,000 patents, which it could be quite key, is in, again, thinking forward longer term for what the next type of technology could be. But yeah, and also with the machines, even if people are not necessarily buying machines, because they're very expensive machines, take a long time to produce, if there's any kind of supply breakdown, obviously that's going to have a knock-on effect to ASML's production time frame. And they do use a lot of suppliers. So they are dependent on suppliers, so there is that risk. But what they do also have is obviously a growing market in terms of servicing the machines. So they do get those recurring income from obviously fixing machines, upgrading the machines, producing new software for the machines. So there is an ongoing revenue stream there. If there's a cyclical change in business and perhaps the orders are down from where they were previously, they could still kind of grow that. But yeah, there's always risks. I think the other one that Awet might be have more information on is the PE ratio. So in terms of valuation, I think like a lot of things at the moment, they're priced quite highly. So
Yeah.
Whether now's the right time to go in and buy ASML, I'm not entirely sure. But Awet, perhaps you've got a bit more on the PE ratio and other valuation metrics.
Yeah, I mean, when you look at the valuation ASML, the market is pretty much thinking the based on our analysis, looking at the free cash flow, the market thinks is going to grow 17%. And I think the company which is monopoly, as we said, 17% growth, future growth is actually fair, we think. Looking at the valuation, there's no concern. I mean, PE ratio is 36 and price to free cash flow is 37 times earning. They might look a bit stretched, of course, but looking at the free cash flow they are generating and considering that they're the quality and they are dominant, of course, you have to pay premium. So I mean, it's a little bit stretched, but always you rarely pay lower price for a quality company. So I think that the time we bought it, as if you remember, we bought the shares when there was a lot of uncertainty, especially with China and so on. We bought the shares when it was pretty much depressed. So we entered at the right time. Now the shares price has, since we bought it, is gained significantly. So it is a little bit higher than when we bought it, but it's still, considering the company quality, is still, I would say, is a fairly valid business. Just to add to your point, Carl, I think you mentioned about in terms of like technology and so on, what's ASML doing is recently what we see with ASML, they are integrating AI into their ecosystem to increase productivity and so on. Using, I think they partner with this company called Mistral, Mistral. So they are embedding AI into their ecosystem. And what we've seen, if you look at the recent annual report, early quarter earning, they are heading to next generation machines. The ASML they are rolling 3D chips packaging and the next wave of semiconductors scaling and so on. So they are pretty much 20 years ahead, and they are building to become. So by the time, if the Chinese trying to to catch up with ASML would be moving to the next innovation. So it'll be difficult to catch up with ASML.
This brings me on to a risk we haven't discussed yet, the geopolitical risk, because as we all know, Taiwan is a very dangerous part of the world, it being the South China Sea, that China has pledged they're going to take over one day. And of course, Taiwan Semiconductor manufactures the vast majority of chips and semiconductors in the world already. But I thought, well, actually, there is they're not a monopoly, even though that they do dominate. They're not a monopoly. They're probably part of an oligopoly of manufacturers of chips, but they're the most successful one. But of course, there is a monopoly further down the food chain, arguably, which is ASML. But fortunately, they're based in Europe. So if you're looking at geopolitical risk, it looks like all these countries are interdependent.
Yeah.
And it makes me a bit more optimistic about the future, thinking that surely we couldn't afford what I'd call an old-fashioned war like Russia and Ukraine, because it would just destroy each other's economies, wouldn't it? Because we're all interdependent now. So, in a sense, that gives me optimism about the future. But I think that future wars will probably end up being technology wars. I don't know what you guys think, but that's my feeling about it. It's actually made me a bit more reassured. What do you guys think about the future in that respect?
Yeah, I mean, if you think about it, the next biggest war is technological wars. Who has more processing power? Who has more control in space and so on? I think that's the future of wars. And cyber attack we've seen recently, Amazon Web Service was down. This is the war. I think that's why we can see this geopolitical risk is rising, attacking each other and so on, disrupting critical infrastructure. So the risk is high. And I think companies like, countries like China and US would increase this war, even though there's a term in economics, like if you integrate a country with trade, you depend on each other. As you mentioned, Tony, it's difficult to go to war. But we've seen that with Russia. It was the other way around. Even though Europe was dependent on Russia gas and oil, but the Russia have just proven that the exception, and they ended up invading Ukraine. So the future risk is unpredictable. We can't see it yet, but it's difficult to tell because it's the future.
Certainly historically, as we know from Ray Dalio, the greatest empire in the world always has its day, and it usually ends with the second greatest empire going to war with it and winning, in which case it would be China taking over from the US. Traditionally, that's the way it's always happened over thousands of years. Hard to imagine it this time, but none of us know, and we were all shocked when Russia invaded Ukraine. Didn't expect that. Yeah. So who really knows? It's a difficult one.
Yeah, I mean, yeah, as you said, like earlier, the concentration is one of the risks as well. Even though, like, five, I think is it 4 or 5 of the ASML, 4 of the top customers makes around 54% of ASML revenue. So they have highly concentrated customers. Especially when as I mentioned earlier, when we go to the leading edge semiconductor chips manufacturing, Taiwan Semiconductor is the only customer. So there is highly concentration risk here. But the reality is there's only a few players as well. So the industry is quite concentrated.
Yeah, yeah. There's a very interesting pyramid structure that Awet's made available, which I've no doubt will be in the company snapshot, that shows all the different companies and the different roles in creating these super chips. There's about 6 different stages, isn't there, Awet? And we can make that available to listeners as well, because I think that'd be quite useful as part of your own research into this company.
Right.
Yeah, I think we've pretty much come to a natural end, I think, for this podcast, unless either you guys got anything else to add before we close.
I was just going to say, just go back to the valuation and share price again. I forgot to mention earlier that this company, I think if you go back to about June 2024, we did see a 40% drop in share price over the sort of that 12-month period. And in fact, if you look at the year range at the moment, so it did get to about what was it, about close to €1,000 share price around July 2024, and then went all the way back down to about sort of 500 to 600. So it's not without its volatility, and I think going back to the valuation point, it's not quite reached its peak high again yet. So again, it's what are you in it for? If you're in it for the long term, I think all the fundamentals are there's a stronger case there that actually, it's a solid company, regardless of kind of price at the moment. But if you're more of a kind of a shorter term trader, again, you could look at that and think, right, well, we did see a 40% drop in share price value, and not that long ago. It's spiked up quite a bit recently. So yeah, just be clear on what you're investing for and how you're investing.
Yeah, good point. And you, Awet, any closing comments?
Yeah, I mean, this is a critical company. Is pretty much one of the best company you can find in the world in terms of monopoly, and it meets a lot of our criteria, and even like very profitable, significantly margin, and great capital allocator. So the key risk is if you're a long-term investor, just buy the shares and continue to buy them. If you see a market dips, just keep buying them and keep holding, because this is pretty much a dominant company and will remain one of the dominant companies. The one risk I see with those sort of businesses is like Apple versus ASML. ASML is pretty much customer, business to business model, where Apple is business to consumers. So there are 2 different business models. With Apple model is consumers tend to be quite loyal and so on. But with ASML, they are monopoly still. They have to be loyal. They have no alternative. So either way, even though we don't like business to business, but ASML seems to be the exception, exceptional one.
Yeah, true. Anyway, We'll be putting links in the show notes, including the company snapshot. Our next episode, we're going to do on a company that many of you may not have heard of, but a company we're invested in our own fund and we're very fond of, and that's Nova Measuring Instruments. Not a household name, but in our experience, a phenomenal company. If you're listening on an Apple podcast, please leave us a review. Make it a good one. Goes without saying. We do rely on you very much. We really appreciate you listening to us. And I think that's it for today. So I really enjoyed the discussion as usual. Very stimulating, very interesting. And I hope you learned a lot from it and look forward to welcoming you to our next episode next month. So bye for now and have a great day.
Thank you for joining us today. Please help us spread the word by sharing this podcast with your family and friends. And don't forget to subscribe.